Hey, this is Awais with eMiniPlayer.net, and this is a recap for Tuesday, May 14th. Let's quickly review our trade plan posted before the open. So in the overnight session, we were using 25 to 27 as the bull-bear zone, and the idea was that buyers can maintain control above that area. That level held in the overnight session, and then heading into the day, we were using 25.75 to 27.75 as the bull-bear zone to establish our directional bias. After the open, we were going to gauge the market strength or weakness and determine whether buyers can continue this upside move. We had the prior VPOC at 29 and the gap at 30.75. And if the market was showing strength, then these were the levels that we were going to enter long in order to take advantage of the upside continuation. Again, buyers can maintain control above 25.75 to 27.75, but if the market has some real underlying strength, ES shouldn't even revisit that area, right? So retracing all the way back to that 25.75 to 27.75 zone would be a caution sign for buyers, and ideally ES remains above 29 to 31 in the day session, and then we had upside objectives at 36 to 38, 42 to 44. So those were the high probability areas that we thought that the market could hit today. Now, it ended up being a trend up day, and in that case, you can't really cap the upside on any given target. We usually just kind of, go with the price action, and on trend days, majority of the time, the market will make a new high in the last hour. So then we kind of just, switch over to a trend type setup and try to hold a position into the close or into that last hour at least. Right off the open, we were going to use the opening range and 29 to 31 to establish our short-term directional bias. The initial focus will be on the long side, and we will only shift our focus to shorts if ES shows signs of a failed breakout attempt. So that was the idea heading into the day, and our main focus by default was on the long side. So now let's look at the opening range, and we can see that we have a open drive right off the open, right? And if we look at the market internals, we can see that even though in absolute terms, the NYSE advanced decline didn't start off extremely strong, the direction of the NYSE AD is very clear, and it's pretty much straight up off the open. The S&P advanced decline opened up at pretty decent levels and continued just heading higher. The VIX we pretty much ignored today. We saw that VIX was kind of doing its own thing, heading up as price was heading higher, and we just chose to ignore it. On the 1 minute chart, we can see that the NYSE tick opens above zero and then holds above zero. And I think if we look at the opening range, the long setup is pretty clear. It's right around anywhere over here, right above 33.5, kind of around 34, around the overnight high. That's the ideal long setup. And if we look at our other charts of the other markets, we can see that TF breaks above the overnight high pretty much right off the open, and again it's an open drive to the upside, and Q also strong right off the open. So at this point we have alignment among the markets. We have market internals showing us that it's likely going to be an upside day. We were already looking for a continuation of the upside, so we were already looking for a long setup heading into the open, so that made it a bit easier to hop on board. When you're already expecting a upside move, obviously it makes it easier to get on board the move. I think today is a good example though of where we actually missed the ideal entry, in our own accounts at least. We did not get long at 34, we actually got long at 35.75. So in this case, price kind of headed higher. We had some choppy price action in the previous few days, and we weren't as aggressive as we should have been off the open. So, but once we identified that this was looking like a trend up day, and with the opening drive, with the internals the way they were looking, with the other markets participating in the upside move, in this case we simply waited for the first pullback to zero on the NYSE tick, or really just any first pullback on the tick, and ended up getting long at 35.75, targeting 42 to 44, and then potentially higher up, right? At that point, you don't really know exactly where ES is going to go or where it's going to stop, But given that we were running about, I think, 120 or 130% of above average volume, we had a pretty good idea that the range would end up being around, at least 14, 15 points. So if we're getting in at 35.75, we're expecting a move up to at least 44, but potentially 46, 47 area is doable, right? Like these higher prices are definitely achievable given the above average volume, given that it's shaping up to be a trend day. So again, I think the lesson here is that even if you miss, kind of that really good price, the price that you want to get in at, if it's shaping up to be a trend day and you have all the signs that are there, then just get on board, right? On trend days, you just want to get on board. The actual price that you get, within reason, is not going to be that big of a deal in hindsight, right? So for example, when you look at the chart like this, right, and you're buying up here, it looks like you're buying really high, and it's psychologically it's uncomfortable for most people, and for myself as well. It's not like when you're buying the highs, it's ever really comfortable, but if you've done it enough times, it does get a little bit easier. So what you really have to do is kind of visualize what the day will look like later on, right? And if this is shaping up to be a trend day, then this is just the beginning. 31.5 is the low. It's probably going to be about a 15 to 16 point range at least, given the above average volume. So you kind of have to project out and see, well, yeah, you might be buying short term. It seems like you're buying at the highs, but when you project out the entire day, you realize that this could be just the beginning of the move, right? And that's what makes it a little bit easier to hop on board. And we can see that later on, once the day starts establishing and moving, in our direction, then it seems like even 35.75 is actually a great price, right? It's actually a great entry in hindsight. But in real time, when you're taking that trade, it does feel uncomfortable. It does feel like you're kind of paying up, to get on board. And it's just something that, you have to kind of get past and realize that, again, once you project it out and you think of where ES is headed or where it could go, then I think it puts the whole picture into perspective and makes it easier to pull the trigger even at, prices which seem relatively high at the time. So our first setup really, ideally, again, it should have been 34, but, we missed this, got on board at 35.75. Once it got to 42 to 44 zone up here, this is where NQ was now heading into the 3000 level, which isn't really any real resistance, but it's just psychological resistance, right? Kind of an even number, big number, 3000 heading into it. So there could be some profit taking at that level. So we decided to take a scale out at the 42 to 44 zone and still leave some position on for higher prices. And one of the reasons for that was we were looking at the NYC tick, and we didn't really see any exhaustion on the upside, right? So you can see as we head into the 42 to 44, tick hits positive 645, which is not really a high tick reading. Typically you see, positive 800 to 1,000 at least to get some short-term exhaustion, and if it's going to be some real exhaustion, then it's ideally even higher than that. But we weren't seeing that, so we had pretty good confidence that this was going to continue to head higher. And above 42 to 44, we had resistance at 47.5 to 49.5. So that zone is up here. And heading into this zone, again, we weren't seeing exhaustion, but price had traveled so much that we felt it was a good idea to kind of lock in the profits, and especially with the way that the market has been in the last week, where we weren't getting a lot of follow through. Now we were finally getting that follow through and that upside move. So we wanted to lock it in with the idea that we would still look for more long setups later on in the day, because once you have that directional conviction and you have that trend type day in place, then it pretty rarely reverses the whole move down. Usually, it'll pull back and then make another push into the close. So, once it got over here, we're taking profit, we're out of the trade, and then we're still open to the possibility of going long again on any pullbacks. So our next trade after that was actually down here at 43. So we had the IB high at 42.25, broken resistance acting as support, and NQ at the same time was heading into its short-term support. So let me actually switch over to this chart where we can see NQ, and you can see that NQ over here, right, is heading into its midpoint, its overnight high. I mean, NASDAQ actually pulled back a lot more than the other markets, but I think that's simply because it was heading into that 3,000 level, and there was just a little bit more profit taking that happened in NASDAQ as compared to ES and TF. So, when NQ comes down here, it seems like it's actually weak, but, we're taking advantage of this short-term weakness, right, as NQ comes into support, and that's helping us time a long setup in ES. And, this intermarket analysis is, it's more of an art than a science because it changes based on the context. So this isn't, how we always time our trades, or this isn't the trigger to get us into trades. But on this type of day, it made sense to kind of use NQ as, a timing or a trigger, and then get on board over here in the 43 area. So basically, we actually got long on this second one, not the first one. We got long over here, 43, scaled out at 45.5, which at the time was the value area high, and kind of, the recent highs over here. It comes back down to 43, and now we're gauging it again. We still have some position on, but, we're kind of gauging, hey, is this still the trade we want to be in? Because if it had come down a little bit lower, we would have actually put on another full position. But in this case, we simply put that scaled out position back on, right, at 43. And then again, we're looking for a move higher into the close. And in this case, we were looking to scale around 45.5 again. But on the 1 minute chart, we noticed that the tick actually was printing new highs on the day, right, over here. And that actually helped us stay in the trade a little bit longer into that next resistance zone above. And we basically ended up taking the whole trade off on this, push up over here into this 47.5, 49.5 zone. So, the last few days were tough to trade. There wasn't really any directional follow through. There were a lot of just kind of, fake moves down, fake moves up. And we did okay in that market, kind of mediocre days. Not really making a lot of money, not really losing any money, kind of just, back and forth. I think had one losing day in that period. And then, on a day like today is really when, we can press it, where we have contextual alignment, we have, alignment amongst the internals, the other markets. When the picture clears up, right, when you get some clarity in the market, that's really when you have to press it. And, really, I think we should have been even more aggressive today. We weren't aggressive enough. For this trade over here, we should have actually been sized up even more, which we actually did last week. We thought we were getting a breakout move to the upside, and on one of the days, I don't remember exactly which one, but we thought we were getting a breakout move to the upside off of the 25-26 area, and, we were really aggressive. We put on a position, and then on the pullback we added another full position, so we were sized 2 times our normal position sizing for a breakout move, and that trade didn't work out. But in this case, we should have been sized more, but we weren't. But that's trading, and that's okay. Overall, it still ended up being a very good day, and definitely can't complain. Now, heading into tomorrow, we're going to be using any pullbacks into support as long ideas. On the upside, after a decent move outside of that, recent balance area, you might only have another maybe 10 or 12 points of upside left heading into tomorrow, right? So ES is close to 1650. It might only have another 10 or 12 points in it short term, right? That doesn't mean that we're calling a top. That just means short term over the next 1 or 2 days, it might only have 10 or 15 points in it. So, we're going to recognize that, and basically, any exhaustion moves we see on the upside, we'll look to short for a pullback to kind of, this 45 to 50 area. And then any moves below 45 into this 40 to 42 zone, we'll look for long setups. Below that, we have the midpoint here at 37.75. And then, this area, this 33.75 to 35.75 is pretty much an automatic buy on first test. That would be just a test of this breakout, if we even come down there. But in the event that we do, that's pretty much an automatic buy on first test. And the high probability buys are really 37.75, 40 to 42, this area. And then overnight, we'll be seeing whether ES can hold above this high volume node of 44.5 to 45, this zone right here. If it can hold above it in the overnight, that's short-term support. We can still get a new high into tomorrow, but I think now we'll probably be heading into more of a consolidation or a range-bound session heading into tomorrow. So let's see how it plays out. I hope everyone did well, and we will catch up in the morning.